Edward Kieswetter, he's the chief executive of Alexander Forbes, used to be a senior executive at Eskom for about 9 years. He joins us now for his thoughts around the pressing issues with the power utility. Edward, thank you so much for your time. Just want to give a bit of context around our conversation. You've been at Eskom for about 9 years or so. Yesterday, President Jacob Zuma said that when it comes to load shedding, we will continue to be under pressure for at least the next 3 years. He also went on to say that the legacy of apartheid, to some degree, is also responsible for where we are. What is your response to where the president sees us and how we got here?
I think, first of all, the reality of load shedding is with us. But I think there are things we can do about that can shorten the path. Secondly, I think we have forgotten that we actually ran the best performance of Eskom in its entire history under the ANC government. So I don't know quite what the president means when he says it's a legacy of apartheid, because actually we, in the time that I have been proud to be there, Eskom was a globally admired utility, performing its plant at over 90%. Yeah. So I think there are 3 points I would like to make during the conversation. The one is about how we go about funding new capacity. Secondly, about our views around energy mix. And then thirdly, not only the impact of current plant performance on the economy at the moment, but more broadly on the cost of electricity overall.
Before we start, Ian, telling us about how we're going to fund this, do you have a comment to make?
One question. I think we'll have to agree that we'll never again see the situation where maybe 20, 30 years ago, Eskom actually could raise capital at a cheaper rate than government. But those are past times, and that reflected on their efficiency, the efficiency of the operation at that time, which gave a base to work from. But it's also perhaps not fair to blame the ANC, who didn't realize the extent of the capital investment that was needed to be able to take the economy forward.
Sure, and I think on another day one can talk about the way electricity was pricing and how it became just distorted in terms of the true economics, which now makes, obviously, the electricity pricing disproportionate to the investment that's required. But that's another conversation.
Right, let's get straight into the points that you mentioned.
So I think, firstly, on the question of funding, over 200 billion required just to fund. Now, for me, we have to review whether all of that burden should sit with the government, with state. If we follow models in the world, and in particular what China has done, China has begun an aggressive privatization of the generation capacity. They've brought in independent power producers, they've IPO'd, they've listed this on the stock exchange, and they've done well. We have somehow a reservation. Quite frankly, who can come in here and take these assets away? They are grounded, the government continues to regulate it, and therefore we should attract more private money into it. We can do that in 2 ways, either through listing and creating through an IPO the opportunity for private funding, but also our pension funds and our asset managers sits with enormous amounts of money. Imagine if every South African could, through an equity participation, not through funding debt, or through a prescribed asset, but through an equity participation, own a part of power stations and the rest of government infrastructure. China last year announced 80 privatization projects. In many ways, we model ourselves ideologically on China. There's a great example. The China of today is not the China of 50 years ago. And we have fallen behind in terms of that. This whole idea that all of the funding must be driven by government or all of the power stations must be built by Eskom is actually not a good idea. Now, I know we've begun to move away from that. If you look at the 15,000 megawatts currently on the plan, there is participation, but that's for incremental new capacity. We should also begin to sell off some of the existing capacity, bring in that funding, and use the funding for many other needs that burdens the state.
You stress equity investment. Is that your feeling that we're not going back to the situation we had in prescribed investments under the previous dispensation, where it was all effectively in loan capital?
Yes,
and at an unmarket-related rate too.
I think we know, as with all the criticism we have of the markets, it is still the most efficient way of raising capital that we have today, and to create broad participation by both offshore and local investment. And, as I said, for ordinary South Africans, as they do in China, to have a stake in the economy in a substantial way.
Edward, let's move on to the energy mix, because you say we've got it wrong.
Well, I think we need a rethink on energy.
Okay.
So first of all, nuclear is important. Okay. We're a country that still have a significant base load, and coal-fired power station and nuclear power stations provide base load. However, you have to ask yourself, did we get the economics right by the underinvestment in renewables? I'll give you two reasons why we should have a significantly more focus on solar. Firstly, we're a sunny South Africa. Sun is the most available energy resource, we can harness it. And the second reason is the economics around that. We forget that in 1997, a watt of solar energy cost around about 75 Rand. Today, it is a couple of US cents. So 100 times less the costs have come down of solar. In 2007, between now, it's a fifth of the cost, and that's because of the advance of technology. It's cheaper, and it's going to go exponentially down. Eventually, it'll be a couple of cents to produce a watt of electricity, and it will be distributed. It won't be centralized in large power stations. In contrast to that, in 2000, recently reported, it was less than 1,000 Rand dollars per megawatt. Today, it's more than 6.5 times that. So the cost of nuclear is going this way. The cost of solar is coming this way. We should be making a bigger investment into renewables for the economics, for the renewable, for the life cycle cost of these plants. Because once you have the equipment in, the primary energy is free. And then the waste disposal afterwards. There is no waste disposal when we use solars. The third point is around plant performance. Again, we forget the current planning assumption of Eskom is around 80%. The war room has targeted 85%. The current plant performance is in the mid-70s. A 10% improvement in plant performance is another Kusile, more than another Kusile. At the moment, we have the equivalent of between 1.5 and 2 power stations permanently off because of plant performance. In the 1990s and early 2000s, we operated the power stations at 90% availability. We had earlier the assumption that power stations were built for 25 years. We know now that power stations can last between 35 and 50 years because of, again, the technology and the ability to manage power plants.
Edward, I'm going to have to stop it there, and I really wish we had more time to delve even deeper into this, but I'm so glad that you were here to tell us about your thoughts on this, having have been at Eskom and looking at the 3 priority areas. Thank you so much. That was a big thank you to Edward Kieswetter. He's the Chief Executive of Alexander Forbes.